You asked for it and you got it. In this month's survey, the overwhelming majority of you guys, about 50%, voted to see a video on what to do now that stock prices are at all-time highs. So a big thank you to all of those of you who voted this month. There were over 1,000 votes, which is great. It's really a win-win if you ask me, because my goal is really to make the content that you guys want to see and that's the most useful to you. So a reminder that I do a similar survey every single month, so you guys, the viewers, can decide what topic I cover next, and all you need to do to be able to vote is to be subscribed. So please subscribe, guys. Make sure you turn on notifications as well so you don't miss out on next month's survey. So let's get into it right away. Stock markets are at all-time highs. This can lead everyday investors like me and you to really have some hesitation about investing further. So I understand the fear completely, guys. If the market is at an all-time high, then for sure a crash or correction is imminent, right? Might as well wait for the correction before investing further. The market is surely overvalued right now, right? So the truth of the matter is this nonsense has been said many times before. Here are 5 things I think you should do, myself included, during this strong bull market. So I get this question all the time, guys, either via email, YouTube comments, or even in person during the one-on-one consultations that I do. And it's completely normal, especially if you're a newer investor. Many people feel bad because they think they missed the boat, right? If only I would have invested in March and April 2020, I would have been rich. If only I didn't panic sell during the crash, my money would have recovered in just a few short months. The market is at an all-time high now, so I'm too late. Forget about it. Trust me, guys, you're not the only one that feels this way. I have felt the same way back in the day. But now with knowledge and experience, I know that this reasoning is purely based on emotion, not reason or logic, 2 things that I'm a huge fan of. So I came up with 5 things that I'm personally doing, and I think every income-focused investor should be doing as well during this strong bull market. So point number 1, probably the most important one on the list, guys. Keep investing regularly. So if there's one thing that history teaches us about the stock market is that over the very long term, it keeps going up. So the important thing to remember, guys, is that the stock market will always have a new record eventually. So this shouldn't discourage you from investing now. Actually, quite the opposite if you think about it, because since the market just goes up over time, in the really long term, like real estate prices, like inflation, then why hesitate to keep investing regularly? If you're a speculator or a trader, it's a very different story. You're consistently analyzing to see the best time you could get in so you could get out later at a higher price and make a profit, right? Investors like us are in it for the long term. Whether you're a growth investor or an income investor, it makes no difference. So there is simply no need to break your head over this, guys. Trust me, the best way to invest is regularly over a long period of time. So when I say regularly, for me personally, I invest every single month. This is what I was taught in grade 10 economics class, and it's still true to this day. In fact, it's one of the things I will never ever forget from high school. My teacher showed us a graph of the stock market. Now, I can't remember if it was the Canadian stock market, like the TSX Composite Index, or the S&P 500. I'm assuming it's the S&P 500. But basically what he said, I never forgot it. So let me show you exactly what he said, because I still remember it to this day. So here is a graph of the SPY. So the SPY ETF is a very popular ETF that tracks the S&P 500. So you could think of it like the overall US market. So this is it in 20 years. And what he told me is, if you actually look at the graph, you could clearly see that the trend is up over the long term, right? So what my teacher told me is that it doesn't really matter if the markets are at all-time highs or not. The key is that you keep investing regularly over time, month after month after month after month. You could actually see here, so there was, think of the all-time high back in 2008. Here you could see here the crash, right, of 2008. Well, even if you invested during the all-time high during that time, or the last year between 2007 and mid 2008, and the stock market crashed, well, eventually it always recovers and it just keeps going up and up and up and up. So even if you would have invested here at the all-time highs, you would have been okay because later on the stock market, it keeps going up. So you would have been okay by a couple of years later around this area, 2012. So the same thing applies today, guys. It doesn't matter that there's a new all-time high record. You could see here there was a record here, then there was a crash. So if some people say, well, if you would have timed it and you would have picked up some stocks here, yes, of course you would have done great. But even if you would have invested during this all-time high, just a couple of months later, you would have been up already. So it would have recovered. So there's no reason to fear investing just because we're at an all-time high. Even if it does crash, there's a crash, it goes down, well, eventually it's going to pick up and it's going to go higher and higher and higher. This is basically what history is teaching us about the stock market as a whole. The stock market, think of it as an asset like real estate. So real estate, what happens with it keeps going up and up and up and up, just like real estate. So think of it the same way, and you'll be okay as long as you invest regularly over time. That's the key. So if you're an income investor like me, it makes no sense whatsoever to try to time the market anyways, because we make all our money with the income the stocks and the funds provide, right? Not capital appreciation or stock price increases. Yes, of course, we get higher yields if we get in at lower stock market prices, but you still can't predict the stock market, guys. Also, look at the last three major crashes: 2000 or 1999, the internet bubble, 2008, the financial crisis, and 2020, COVID-19. There are many, many years between those crashes, right? So what are you going to do, guys? Leave your money in the bank doing nothing, or making 1 to 2% interest while you wait for the next stock market crash? What if it happens in 10 years? So if you're an income investor like me, you can easily make, even in today's market, an 8% yield annually. So in 10 years, you will literally make 80% of your money back in dividends and distributions alone. So this means that if you invest $100,000 now, in 10 years, you will have made back about $80,000 of it in dividends alone. And there's a good chance that your capital, will increase as well. So that's what history teaches us. So it makes no sense to me to try to wait it out, hoard your money, wait for the next crash. So personally, ever since I switched to the passive income investing style back in 2018, I have been investing regularly every single month, and it has worked out wonderfully. So I will continue to do so and strongly suggest that everyone does the same. I even showed you guys that what I buy every month, or what I think is a good idea to buy, with my monthly stock pick videos and my monthly portfolio unveil video. So I actually do what I preach, guys. It's simple, it's easy, it's consistent, and it carries no stress or anxiety, just the way I like it. Point number 2, guys, analyze your portfolio. So I consider a bull market like a vacation or downtime. It's harder and harder to find good deals on what to buy next, but there is much less stress in the air, and it gives us a perfect opportunity to take a step back and analyze our portfolio composition. So I talk about this often and will continue to do so. Diversification and balance is what gives a portfolio its longevity and stability over the long term. Warren Buffett famously said that diversification is a hedge against ignorance. So it makes perfect sense if you're somebody like me who does not know how to really analyze businesses or dig deep and analyze single stocks. So translation, pick stocks, right? So my strategy is really to try to have a bit of everything, the big blue chip stocks in all sectors. So take a moment, do a deep dive analysis of your portfolio composition, and ask yourself the following questions. Are you too heavy on a certain sector right now? What sectors are underrepresented in your portfolio? Do you have a sufficient amount of defensive sectors like healthcare and utilities which stay strong during corrections and crashes? Which regions are underrepresented in your portfolio right now? Are you comfortable with the types of funds that you have? Or do you have too much exposure to higher risk funds that use leverage, like split share funds, for example? So these are some questions you can ask yourself, like I did. Now is a perfect time to act accordingly. The fact that you invest regularly every single month makes this easier, because in the next months or years, you can adjust your portfolio so you make it more resilient, more diversified, and more balanced, so you're ready for the next crash. So So being an investor, guys, in a bull market is very easy. Even a monkey could do it. It's during crashes or corrections where you will see what your portfolio is really made of. So here are some examples on my personal portfolio analysis and some changes that I made or am in the process of making. So in 2019, 2020, I had 125 holdings in my portfolio, 50% of which were single dividend stocks and REITs. So during the 2020 crash, my income took a big hit and some of the single stocks and REITs cut or even suspended their dividend. Right now, I only have 42 holdings, so much less than half. And I only have, at the moment, 5 single stocks and 6 single REITs. So that's the adjustment that I made. I also learned that single REITs can also be at risk of dividend reductions and cuts. So I sold many of those too and now only own 6, like I mentioned. And because I prefer REIT funds that hold a collection of REITs because you dramatically lower your risk. Funds like IDR and RS run by Middlefield. Another thing I saw from my portfolio is that financials was really making a big percentage of my portfolio. So I took a break from financials in the last couple of months and invested more heavily in other defensive sectors like utilities and healthcare to have a more defensive portfolio for the next crash, as financials are typically hit very hard in crashes, just like 2020 and 2008. So these are some examples of my journey and analysis. So it's up to you guys to do it for yourself as well. It's not rocket science, guys. You don't need to be a financial guru to do it. It's just common sense, and it does get easier with time and experience. Point number 3, pay off your debts. So this is a no-brainer, guys. Besides your mortgage, if you have one, you shouldn't have any other debts if you're investing regularly. If you still have credit card debt, car loans, student loans, personal loans, now is the perfect time to realize some of those capital gains we all have now thanks to the strong bull market and pay those debts off. Let's not sugarcoat it, guys. Being in debt simply means you're a slave. I'm not religious, but if you don't want to take my word for it, well, just look up Proverbs 22:7. The rich rule over the poor and the borrower is slave to the lender. So Dave Ramsey mentions this Bible verse all the time, right? The borrower is a slave to the lender. So it's time to break off those shackles, pay off your debts, guys. And what better way to do so than using your capital gains you made from the stock market? Perfect. Point number 4, save money the smart way by investing in a safe ETF while still making 7% yield. So this point is really for investors, although I disagree with the approach that want to put some money aside to invest during the next crash or correction. But it's also for people who simply want to have a backup plan or want to have a nice big emergency fund. I don't think it's a bad idea, and I know that Dave Ramsey is big on this for the financial steps to financial freedom. So there's nothing wrong with putting money apart now, especially with markets at all-time highs, but don't leave it in a cash savings account or buy some crappy granny investment product that makes 2% interest annually or less. You simply don't need to anymore. There are super safe ETFs that offer annual yields or an interest rate, think of it like an interest rate of about 7% and have very little stock market risk. So I got a video lined up to talk about some of these ETFs in detail, so stay tuned, but consider this a small preview. I'll share with you my go-to ETF in Canada and the one I would personally use in the US. So in Canada, you can use the ZPW or the ZPH ETF. They are the BMO PUT WRITE ETFs. Now, these are basically the same, except ZPH is currency hedged and ZPW is not. So these ETFs basically hold nothing at all, no stocks whatsoever. They hold US T-bills or treasury bills, which is government debt, the safest investment pretty much of all time, right after cash, of course. And they write put options on Blue CHIP U.S. stocks. So put options are basically the opposite of covered calls. Very, very safe if done properly, but BMO is a fund manager that I definitely trust for this. So you put your money there and you'll get about 7 to 7.5% on it every single year while you wait. fantastic. In the US, although I haven't found an equivalent put option ETF that holds nothing, you could use the NUSI or the NUSI ETF. It's basically a covered call ETF that tracks the NASDAQ and sells covered calls on it, but it also has a protective put option in case the NASDAQ takes a tumble. So they both have, the Canadian option and the NUSI, about 7.5% yield, and they're very, very stable funds. Check out the stock price if you don't believe me, and stay tuned for a video which I will cover them in more detail. Point number 5, guys, last point, spend some money to make your life better. Yes, you heard right. People obsess so much about total returns that they actually forget what it's all for, spending some of it. So life is short, guys, and you need to reward yourself. I say it at the end of every video, right? My mission, the mission of the channel, is to help everyday people to invest on their own, to create their own stream of passive income, to enhance your quality of life. So does money equal happiness? Well, money definitely can enhance your quality of life, which leads to happiness, right? So as a buy and hold income focused investor, it's pretty simple, right? All the income or the dividends and distributions that you make is pretty much interest. So you don't have to feel guilty about spending it, guys, because you're not even touching the principal. That's how I see it anyway. So making your life better means different things for different people, that's for sure. One of my favorite ways to spend my money personally is to make my life easier and less stressful by eliminating the annoying things I hate doing. So it's not that hard, guys. Make a list of all the annoying things in your life that you don't like doing. You will quickly realize that money can solve a lot of these problems. Here are some examples that I can personally share with you. I recently sold my 2008 gas-guzzling Infiniti SUV and bought a fully 100% electric car, a used 2018 e-Golf. So how does this improve my life? Well, I reduced my car expenses by about $150 a month. Also, the convenience is super underrated. No more trips to the gas station, much less maintenance, so less trips to the mechanic, no oil changes, anything like that. Also, it's much better for the environment. So it's really a win all around. There's one example. Another example, my wife and I, we hate the winter. We hate the cold. So how can we alleviate some of this hatred and annoyance? Well, we'll do what many retired Canadians do only 30 years earlier. Snowbird for 3 months during the winter. So now that my wife is retired, we can continue making YouTube videos from anywhere. We finally have the chance to get the hell out of Dodge every winter going forward, and it's all thanks to our passive income. And now that we rent an apartment with a garage and own an electric car, we don't have to worry about starting it when we get back, or winter tires, because we simply won't be here. So think about it, guys. What are the things that you do in your everyday life that are super annoying? What are some of the things you always dreamed of doing but were not able to, but you can now because you got some passive income coming in? So think about it, and more importantly, do it, because life is short and money should be spent so you can live your best life now. It shouldn't be, you shouldn't hoard your money until 80 years old when you can't even spend it even if you wanted to, right? Thanks so much for watching, guys. I hope you enjoyed the video. Please give a thumbs up. I would really appreciate it. It helps the channel grow and reach more people, so it's a win-win. Also, don't forget to visit our website, passiveincomeinvesting.ca, so you could access my digital product or purchase my digital product, the Ultimate Dividend Passive Income Investing Package, which basically is all my years of research put into a bunch of spreadsheets, and it's good for Canadians and Americans as well. So you could easily sort if you're a growth investor, an income investor. There's my comments for each one. There's sample portfolio. So it's a really good product. I took a long time doing, and it's only $45. It's not expensive. Make sure to pick it up. It also comes with lifetime updates in case a newer version comes out. Also, I do offer a one-on-one consultation service on my website, but unfortunately I'm completely booked until August. I will let you guys know as soon as the August appointments open up. It will be sometime in July, so stay tuned for that. It's very easy to book an appointment when they do come out. There's a big calendar on my website. You find a date and you book the appointment. So finally, make sure you're subscribed, guys, once again, so you don't miss out on my future content and community posts, which include those monthly surveys, so you could vote on what topic I cover next. We're also on Instagram, so follow us there if you use that social media tool. We're also on Facebook. We have a Facebook group that keeps on growing. We're at 1,500 members now and still going strong. We have a nice little community there where you could ask all your questions and people respond. It's really cool to see. So join us there if you use Facebook as well. Our mission, the mission of this channel, remains the same, guys. It's to help everyday working people to invest on their own, so they could build their own stream of passive income to enhance your quality of life. So with that, take care, guys. Stay safe. See you next time.